All right, guys. So we're about to go over my day trading strategy. We're just going to call this one part one of my day trading strategy. So first of all, what the first thing you want to do before you get ready to day trade, we're talking about day trading right now. Nothing is about swing trading right now, right? The first thing you want to do is you always want to check the futures, right? Pretty much that is /ES, right here. I have it at this top corner right here. We have /ES /NQ, right? NASDAQ and the S&P 500. You want to look at those first. The reason why is because you can kind of gauge how the market is going to be that day. So this morning, before we even traded, right, I sent a message out this morning and I was like, hey, be careful today. We're going to be flat, right? How did I know we were going to be flat? Was simply because before the market opened, we weren't really up that much. That's number one. You can go on Yahoo Finance. That's pretty much what I do the quickest. Yahoo Finance has a little tab at the top where it like show you like the futures and stuff. And I just pretty much go in there. And if it ain't up that much, right, then you kind of know. Like if it's only up like sometimes it'd be up like 5 points, 10 points or nothing crazy, right? Like the other day, I think when the Dow opened, it was down 300 points. So that's not a flat open. That's already telling us that we are going to be bearish, right? It was already down 300 points before the market even opened. So this morning, I think we were down or maybe up slightly. I don't know, like 10 points or something. So we weren't up that high, right? So that already gave me an idea that we're going to be flat. Another thing that gave me an idea that we're going to be flat is we have the Fed's meeting tomorrow, right? So normally the day before the Fed's meeting, the market kind of be choppy, right? So that's another way. But also just simply looking at futures before the market open, you see as soon as before the market open, we kind of just didn't have no direction, right? We were up, down, up, down. We didn't really have a trend, right? We just literally was just pretty much just up and down, right? So that gave me the indication that, we're going to be choppy, right? And, that's pretty much what, I thought of, right? So normally when we have days like this, when we have a flat open, I normally don't trade the first hour of the market. I don't care what I see. I literally do not care what I see on the charts. I leave the first hour alone because I want to see if the market can pick a direction, right? So that's normally how it's going to be hard, guys. You never know when the market is going to be choppy, but that's kind of a good indication to kind of help you a little bit better, right? We're not going to always be 100% be able to predict the market at all, but little things like that helps you, identify stuff so you'll be a little, have a little better advantage, right? The whole point of trading is to find an edge. So that was pretty much my edge today, that I didn't get chopped out in the first couple of hours of the market because I already knew, based off of we were going to be choppy. What time is it you check the futures exactly? So I normally check it when I wake up. For me, the market, I'm on a 5-minute time frame. That's normally the one I check. I pretty much go through all of them, but normally the 5-minute time frame for day trading, it gives me an idea. But the market for me opened up at 8:30. So I normally get up around. It depends. If I did a swing, I'm gonna probably be up at 7 o'clock, 7:15, 7:30, give or take. But if I didn't do a swing, I'll probably get up at like 7:50, 8 o'clock, like 30 minutes before the market open. That's just me personally. Yeah, take it how you want to do it. You can get up 5 hours early. That's up to you, right? I'm kind of impatient. When I get up, I just want to go straight to the, get ready to start trading. So if I get up really early, I'm gonna get impatient. So that's what I did this morning, right? That kept me from getting chopped out. So what I did this time was one of the trades that I took. Now we're about to go into the trading recap so you kind of get an idea. So I already knew the market was choppy. So then we started, kind of like gapping down and everything and kind of, trying to find direction, right? So as you can see, after the market opened, we created this little bear flag and then we started having this down movement and then we pushed up. So pretty much I wasn't interested in nothing dealing with the S&P 500, really. I wasn't really interested in SPY anymore at this point. So what I did was normally when I don't see nothing good on like SPY maybe or NASDAQ, I kind of look into other things such as like oil or something like that. So you don't brush your teeth is what you're saying. No, I get in the bathroom now. Chill. But so that's normally when that's kind of about to get into how I even found the oil stocks, right, that we traded today. So pretty much I didn't really like SPY. I was actually watching the contracts. What I like to do is, especially with Robinhood, that's why I love Robinhood feature. I added a call or a SPY call, and I added a put. I just did that. I added on my watch list just to see how it moved. And when I say, guys, that, SPY will move up, and then, it wasn't really moving. The contracts wasn't moving. So that kind of gave me an indication that I don't want to trade as well, right? I do little tricks like that to help me just have a better edge in the market. So I literally, I was telling my mentees, I'm like, hey, I'm about to add a SPY call and to put to my watch list and just kind of see how either side moves. And when I say it was going up maybe 7%, down 3%, SPY will make a $2 move up. They'll only be up like 10%. So I just knew right off the bat I didn't want to trade SPY. So it made me go into oil. So number one thing that I want to do whenever I'm about to look into something else, I want to look at an ETF that pretty much for oil, right? So that particular ETF for me is called XOP, right? That's the ETF that I use for oil and gas, right? Remember, the only reason why I looked at this, bring it up one more time. The only reason why I even looked at this was because I didn't like SPY and I didn't like the NASDAQ. So I just wanted to look into something else. That's all. That's the only reason, right? So I don't have any scanners or anything. So normally I'll try to look for anything on the bigger time frames. That's part of my day trading strategy. I like to look at the bigger time frames, right? Didn't quite see anything on the daily too much at the time. So I came down to the 4-hour. On the 4-hour, I didn't really see anything. I seen that we were below the 9 EMA. So I didn't really see it. Yeah, it's called XOP. XOP, that's what it's called. Right. So I didn't see anything too much on the 4-hour. I did see that we were below the 9 EMA. As you all know, if you trade with me, you know that if a stock is below the 9 EMA, I am bearish, right? So then normally for day trading, I come down to the hourly chart. That's like my big time frame for the hourly chart. So once I was on the hourly chart, I want you guys to see something real quick. I love trend lines, right? That's number one. And we're going to go over trend lines tomorrow. So I'm going to briefly just show you what I mean by that. But I love trend lines, right? So whenever we're dealing with a put situation, I'm always looking at trend lines, right? When we're bearish, because I like trend line rejections. That's my favorite. So if anybody want to know what's my favorite setup, I love double tops and I love trend line rejections. Those are my favorite type of setups as far as when it comes to puts. So as you can see right here, I was looking right here to make a trend line valid. Like I said, we go over this tomorrow, but to make a trend line valid, you want to have at least 3 touches, right? By looking at this, can we see it touching the trend line 3 times? By just looking at this, is it touching the trend line 3 times? Yep. So let's go ahead. I'm going to highlight it for you guys that's probably thinking no. Let's go ahead and count it, right? It's not a valid trend line unless it touched 3 times. So we have a touch here. We have a touch here. We have another one. You can't really see it, but, I count that one pretty much a touch here. And then we had a touch here. So we have more than 3, right? We just want 3 for it to be valid. So that's number one, right? None of this had happened yet. So next I got that, but also we have a chart pattern. Can anybody tell me what chart pattern is in here? And like I said, if you don't understand chart patterns or you're still getting hard at seeing it, you will get better at it as time go by. Let me go back real quick. Not a double top. Okay, I'll take a double. Y'all know I don't like patterns like that. Y'all know I like it, but I have a bear flag, right? So let me draw it. But yeah, I guess you could say double top. That's fine. We're right here. I have a bear flag, and I'm gonna show you guys a picture of bear flags in a minute. This is a bear flag, right? How do we identify bear flags, guys? We learned this last class. What is the first thing we're looking for? What is the first thing we're looking for? Impulse, right? We had an impulsive move down, right? Look at that. It literally gapped down. Impulsive move down, correction, and next was impulse, right? So that's number one. But hold on. Let me get this straight, right? So this is what I identified. This hasn't happened yet. None of these 4 candles haven't happened yet, right? And you can look back. I sent the chart when it happened. I sent the chart when I was taking this trade. So you already know. But that was number one, right? So next, I'm looking at the oil ETF. So can anybody guess what I'm going to do next? If I'm not looking to trade the ETF, but what am I going to go look at? Find an oil company, right? So let's go to one of the oil companies. So I actually, because I know everybody in here is not from the mentorship or just Blueprint. I actually traded 2 stocks today. I shorted Chevron and I shorted Exxon Mobil. So we about to go over Chevron first because that was the first stock that I had shorted. So here we go. So we got that, right? We're bearish on oil, right? That's exactly what I said in the chat. I said I'm bearish on oil. And then when we pull up to Chevron, right? It's ticker symbol CVX. We pull up there. Now our whole job is, I traded Exxon and I traded CVX. I traded 2 stocks today. I shorted 2 oil stocks. So now, since I'm bearish on oil, what am I now looking for on Chevron, right? What am I now looking for? A+ setup. A+ setup, but I'm also looking for just anything bearish, right? I'm looking for something that agrees with the ETF, right? So as I'm looking on here, obviously I'm gonna go to the hourly because I'm on an hourly chart, right? So let's go here. Okay. Now we just had class over this. Guys. So first of all, what do I notice? What is the first thing you guys notice on here? First thing, not quite an impulse just yet, but hold on, no, not a support level. But this has not happened yet. None of this has happened yet, right? What am I noticing? Y'all probably don't know yet because I haven't taught you trend lines. But I noticed in the trend line first, right? There we go. To make it a trend line, it has to touch 3 times, right? That's the first thing I'm noticing. You can actually bring this up here if you want to. It really come all the way up there, right? So we have basically a rejection here, rejections here, rejections here. Is that 3 times now, guys? Is that 3 times, right? That's 3 times, right? Yep. And this count as well. I mean, you don't have to count that week. You could just count this actual candle, but it never closed above the trend line. So we have 1 rejection, 2, 3, 4, and we have 5, right? So at the time that I'm about to trade, none of this has happened yet, right? So now what else do I have on here other than a trend line that's telling me bearish? We just went over this. I don't expect everybody to know this yet, but we just went over this last class. Nope. Wait, was last class trends? Well, this was a lower high. Good job if you said that. But also, there we go. There we go. That's what I was looking for. Supply zone. Or you could have said resistance, but I would just say supply zone, right? Here we go. We had a balance period. We had a balance period. Impulse. There we go. Supply zone. So what happened? Chevron gapped up into a supply zone. So now that I know none of this has happened yet, but now we're in a supply zone. Oil looks bearish. We're in a bear flag, and we're in a supply zone. So now, as I'm taking this trade, right, I'm watching them to break out of this supply zone, but I'm also watching for this to break out the bear flag. So look, it broke out the bear flag at 11 o'clock, right? What time did this break out? 11 o'clock. You see how I use this? You see how I use extra confirmation. This is what I call an A+ setup. Why? Because you have multiple confirmation. You have your ETF that the stock is in. You have your ETF for oil bearish, and now you have your stock bearish. So that gives you that extra confirmation. You have multiple things. Also, real quick, what else on here before it broke out? What else on here that told us we was coming down? You can use XLE2. I just use this one because I'm not gonna lie to you. That's just kind of the first one I picked. But all of them gonna look exactly the same. But what else? What else, guys? Something else is here. We have volume on the break. Yep, we did. We had that volume bar was higher than that one, but we also got something else. Depth cross. There we go. We got a depth cross on the stochastics. right? The stochastics, if you don't know what it is, we just went over it. The stochastics is a momentum indicator, right? It literally gauges it tells you basically the shifts in momentum, right? So the stochastics was telling us that the shift is happening in momentum to the downside. Look where it happened. Look at it. It gave us, and the reason why, like, it's similar to the MACD, but it's a little faster, right? Look what it had gave us. It told us that the momentum was shifting before it even broke out. Look at that. It gave us a death cross, a sell signal before it broke out. So we were able to already think like, okay, momentum is shifting to the downside, right? And there we go. We take the trade. That's simple. How many more confirmations do you need, guys? Now, I'm about to give y'all, so I told y'all, when it comes real quick for the new people, when it comes to bear flags, what did I tell y'all that's a magnet? What did I tell y'all that's a magnet? Because I want y'all to see how I got my levels for it too. What did I tell y'all? When you see a bear flag, what is a magnet? What do the stock price 98% of the time go to? Bottom of the bear flag. There we go. That's there it is right there. So what I mean by that is, how it works is you have a bear flag. The lowest point of the candle in that bear flag is going to be like a magnet. I'm telling y'all, you can try it, you can back test it all you want. I'm telling you, 90% of the time, that low is a magnet. The stock price 90% of the time coming there. 90% of the time, right? So guess what I did? I might not have had that at a level at first, but I'm damn sure about to put it now, right? So that's how I got that level. That's literally how I got that level, right? We broke. What happened? We hit that level. What do? We bounced. And almost 90% of the time, it's coming to that lowest candle point. What did it do? It came exactly to that and wicked at it. So how did I know to get out of Chevron before we reversed, right? I personally, when I was doing Chevron, this is why you have multiple confirmations, right? Look at this. I wanted Chevron to come here. This is where I was looking at. But also with my ETF coming to this support level, look at this candle. Look at this candle, right? This candle, we hit support right at the same time that this one reversed, right? So that's what, as we seen the ETF hitting support, I'm just going ahead and taking my profits, right? I wanted it to come down here, but we have the ETF hitting support. So that's a good sign to start taking profits, right? And as you can see, we end up taking profits and we didn't get caught in this pull-up. We didn't get caught in this. We didn't give gains back. We literally, if you look in the chat, when I was saying I will start taking profits here, that exit was money, guys. Because what happened? What happened? That exit was money, right? I used the ETF. I used the support level at the ETF to get out. So I didn't get caught in this pullback, right? You have to use different things. I'm using the ETF as an indicator. It hit support. Okay, well, I'm gonna have my people. Well, Jay, it didn't hit my target, so I'm still holding. I mean, the ETF did. The ETF did. So not every time it's gonna work that way, but most of the time it is. And honestly, you already up 50. This was on Chevron. We were up like 50% on this, right? So go ahead and take that. We hit that support. Go ahead and take that. And now if you want to leave runners after that, that's fine, right? Your runners obviously got caught up, but I mean, it is what it is, right? Somebody said I got some good eyes. Yeah, I ain't gonna lie. But it comes with time though. Like when I say at first, like I know it sounds crazy. It sounds like, man, I'm never gonna get to this point where I can just have an eye like this. I promise you, repetition, getting on it, even if you're not trading, get on the charts, right? Act like you're in the trade, guys. Act like it. Like, okay, I'm not trading today, but maybe if I took this, or maybe if I seen, this is a trade that I would take, right? Then you will start gaining your eyes. I haven't been trading as long as y'all think. My first trade, we just talked about this yesterday. My first trade was in 2019. I didn't know nothing about stocks. I didn't know nothing about investing. I was playing football. I was in football, guys. So I ain't know nothing about stocks. So understand that. That's how it worked. Where is the support? Can you show us again? The support is right here. So how I found this level was I plotted the bottom of the bear flag. I do this with everything. I'm about to show you an example. I think Chevron in the next couple of weeks is going to go to 150, 151. And I'm going to show y'all why. Because I'm doing the same thing. That bear flag, I mean, this is a bull flag. So bull flag fall. I'm gonna just show y'all an example of it. But anytime I trade a chart pattern, I'm always using that chart pattern as a target, right? I'm always using it, even if I don't have that level in the first place. So, but we also had a support level here on Chevron in the first place. So this one right here, this was a support level right here. That 165.75 was support anyway. But I'm just saying, if you didn't have it, I didn't have it up at the time either. So if you didn't have it, you had an indication right there once we hit support to go ahead and take profits, right? But like if you already had it, then you lucky, you know, you on the money, right? You better than the rest of us. But so that's how I took Chevron. Now, what made me take Exxon, right? So remember, I took Exxon a little bit after Chevron. I took it a little bit after, but it was still the same reason though. I'm short on oil because of the ETF. So now we got that, right? That was the trade that we took. Did that make sense before I move on to Exxon? And I'm gonna ask you guys questions in a minute, but did it make sense? I'll make sure I didn't confuse nobody. I keep it real simple. So I put in my notes, right? This is what I got. I took the 170 put on Chevron. Why? It was a supply zone and a trend line rejection. And I had the oil ETF and the bear flag trend line rejection. And I had the stochastics indicator going down, right? That is all I needed. That is all I needed. You know what I'm saying? So that's literally all I needed, right? I took the trade. So there we go. So now let's go to Exxon real quick. Oh, here it is right here. My bad. The stochastics indicator. Sorry for my screen I don't know how my screen looked to you guys. This is a monitor, so I know it's probably kind of wild on y'all phones, but here you go to stochastics indicator right here. So we had a death cross. No, we actually took profit on Exxon. I said it in the chat. But I still think it's bearish, right? I plan on getting in it tomorrow as well. So if you swung it, you'll be okay. Okay, so next, let's go to Exxon. So Exxon was pretty much the same thing. Pretty much the same thing, right? Same reason. What do we have? What do we have, guys? I can draw that a little better. Like I said, and we're going to go over trend lines a little more in detail tomorrow, because I know some people probably get confused on them a little bit. But we'll go over there tomorrow. But we had 3 rejections on here as well. Like if they come over a little bit, that's fine. You know, that's fine. But we'll go over them tomorrow. So I kind of get a better, you can't just be drawing trend lines out of nowhere. But I love trend lines, guys. So here we go. Pretty much the same thing. I'm not gonna lie. When I was in Exxon, I'm just being real transparent with you guys. I was already bearish because I had looked at Chevron first. So I was already bearish on the ETF and I was bearish on Chevron. So really, I didn't even really look at the trend line, if we're being honest. What I did was, so let's clear the trend line, right? What I did was I just looked at the supply zone. I didn't have to do a trend line, if we're being honest. I just looked for a balance period. There we go. And there we go. So we were in the supply zone right there. And if you don't know how to identify supply zones, you're looking for a balance period in the market, right? So basically where buyers and sellers are pretty much agreeing on price. So let me zoom in real quick for you guys. So right here, y'all see this? Y'all see this right here? This is a balance period, right? This means it's pretty much, it's kind of just staying in this area. So this is a balance period. So normally you want to have a balance period and then you want to have an impulsive move out of that balance period. So then basically the whole goal is when it retests that zone, then it sells off again. That's literally all it is, right? Literally, that's literally how you find them, right? So as you can see, we never trade in this. This is the problem. This is why people blow their accounts, because they trade in the balance period, right? You don't trade in this, guys. This is what you stay away from, right? We stay away from this. We wait for imbalance. We're waiting for imbalances, and then we take our trade. So we had a balance period, boom, imbalance, came back up here into this zone. Now we're waiting for an inbound. Let's move out of this break. Take the break out of this zone. Ride it down. What time is daily? Oh, so when it comes to supply and demand zones, you want to start with the bigger time frames. Always, you want to start with your daily time frames, 4 hour, 1 hour. And I'm not gonna lie, the lowest I go is the 30-minute for my zones. I feel like if you go anything, I mean, some people might say the 15-minute. Me personally, for the 15-minute time frame, I would just rather do support and resistance. But like supply zones are pretty good for those 30-minute 30-minute and up time frames. But you want to start from the bigger time frame. You find them on any time frame, guys. So you find them on any time frame. That's it. Like I can go into more detail, or I actually have a class that we just went over about supply and demand. If you want to go check that class out after here. But other than that, yeah, that's pretty much it. There's also, okay, hold on. So that's pretty much, did everybody see why I took them? What are you looking at right now? I'm looking at Exxon 1 hour chart. I'm looking at, basically, I'm showing you guys why I took Exxon puts as well. These puts went 60%. Not gonna lie, some of my runners did come back on me, but I was able to still get out because of that support level. And I'm gonna show y'all where I got this level from as well. But yep, so we have our trend line supply zone. We took the rejection out once it broke. We had confirmation right here. Let's add our, I didn't use indicators for this one, but let's add them and see if our indicators helped us as well. Let's go see. Yep, they did. Actually, our stochastics indicator helped us. What do we have on the stochastic, guys? Yep, this is how I play my options. We had a death cross, right? A death cross is showing, is telling us what? What is a death cross telling us? Bearish, but like, what is the actual term instead of just bearish? What's the actual momentum shift, right? We having a momentum shift to the downside, right? Reversal, momentum shift. That's really, it's a momentum indicator. The momentum is shifting to the downside. If we have a cross to the upside, momentum is starting to shift to the upside, right? So we use that in conjunction and we start adding everything up. Okay. Like, I mean, I'm trying to get y'all to understand what I'm saying. Like, what more, because people be scared to take trades. What more confirmation do you guys need? What more do you need? Take the trade, right? We have our ETF bearish. We have trail line rejections, bear flag, breaking down the bear flag, momentum shifting to the downside, trail line rejection, supply zone, momentum shifting to the downside, high volume on the breakdown. What more do you need? You don't need nothing else. Take the trade. Take the trade. I literally hear people, they was like texting me today saying, Jay, I missed that trade. Take the trade. What more do you need? If you lose, you lose. It's a part of the game. If you have the right risk management, that's fine, right? Just take the trade, guys. And if you don't want to take the trade, at least, okay, do yourself a favor. At least paper trade it. Or at least go on Robinhood watch list and add it to your watch list. Practice it, right? Yes, this is recorded. Yes, this would be uploaded. So, right, good question. Now that we're about to get into stop losses. So we took the break here, right? So if we come back into the supply zone, that will be where my stop loss is. If we come back to this supply zone. So as we broke here, that next candle, what happened? We finished and we closed below the supply zone. So how I would have had it is I took entry literally as soon as we were breaking this zone right here, around here, this candle right here. I took it around this candle, maybe a little lower, probably like right here. I took it on this candle, right? So the only way this trade will be invalid, really, if we being honest, our stop loss not going to be until we break above this zone. But we trade options and we know that can get pretty ugly. So yeah, so my thing is, if it comes back into the zone, I'd rather cut than hold. You know what I mean? I'd rather re-enter than hold. That's what I mean. So like, I'll take it here. So if we end up closing back above in this zone, I'm going to cut the trade. Not saying that's the problem with you guys. You guys will cut a trade Like you will have all of this set up, right? You will have all this set up. Everything look all good to you and everything. And then you start taking the P&L hit or whatever. And then you will cut the trading like, man, I'm done. I'm done with this setup. I'm not trading this just to see it go your way, right? That's why I tell people, yes, cut it. You got a bad entry. That's fine. That's fine. That is totally okay. That is totally okay. Cut it, get back in, right? Now, as far as stop losses, that is like an actual chart stop loss. As far as growing accounts, I don't care what it is. My stop loss is at least 20%. Now, I will say this, guys. I will say this, right? I'm really transparent. Not every time I be disciplined to that 20% stuff. Normally when I'm because most of the time I'm not growing the account. And sometimes when I do be growing accounts, I kind of be blowing them a little bit simply because like I be having my big account mindset versus when you go in a small account. And yes, I took this off the hourly time frame, right? Because I wanted that bigger move. I didn't have to come down to the 5-minute. I wanted that whole move. So I can monitor it on the 15-minute a little bit so we can bring this down to the 15-minute. But overall, I trade with multiple time frames up. See, look at that. The 15-minute was just too much noise for me personally. Maybe for you guys, it was just kind of too much noise for me. You know what I mean? So I personally rather take it on the hourly. I do a lot of trades like this. I like taking my trades on the hourly chart. And I just hold it. I might come to the 15-minute to monitor it or whatever. But normally what I do is my chart will look something like this. So I got my ETF up there in the corner. Normally I don't have these indicators on, but I have my ETF up there in the corner. And then I have maybe another time frame right there. You know, I have my 15-minute up then. Right? I have multiple time frames up, right? And that'll just help me hold my trade longer. That's all. Y'all see what I'm talking about? So right there, we on the 15-minute time frame here. We're breaking out of that rejection. As you can see, we still coming down. I can watch it on the 15-minute, but I also got my hourly chart up just to make sure I'm not getting shooken out. And yeah, 15-minute, 10-minute. To me, honestly, guys, if it's a choppier day, I'm going to probably use a 15-minute rather than a 10-minute because I didn't want to get shooken out that fast. But if it's like a normal flowing trending day, then I use the 10-minute. It depends. To me, it really, the 10-minute, 15-minute don't really make a huge difference. You know, it don't make a huge difference as far as that go. But yeah, it could be any time frame that you kind of prefer. It's up to you. And if I would have noticed this, guys, I actually didn't know that this was a support level. I didn't when I tell you guys, I literally just took Chevron and I was watching the ETF the whole time pretty much. If I would have noticed this, it bounced right off support. It bounced off. Look at that. That was a support level from yesterday. And then it bounced clean off that support. So maybe I would actually noticed that anyway. But it's all worked out in our favor. The question was, and I'm asking this next question. Wait, hey, what's the difference between a rising wedge and a bear flag? I got you. So real quick, if you don't know me, I hate rising wedges. I have the worst luck with them. So you might see a rising wedge and I might just, I don't like them. I don't like rising wedges at all. I lose every time on them things. But so normally what happens is a rising wedge. So you start with a resistance, right? And then we have price come into that resistance. I drew that. This is too steep. Hold on. Like I said, I hate these. I'm not your guy for rising wedge. That's still too steep. That's probably why I suck at them, because I don't know how to draw them. It's like that. It's like, yeah, like this. Okay. So you got a rising wedge. So normally you have a move down and an impulsive move down. It's similar to a bear flag, right? We have an impulsive move down and then price pretty much corrects in this flag pattern, and it has to go into resistance. Told you guys, it has to be at a level. It has to be at a supply. The rising wedge has to go into a resistance or a supply zone. Understand this. It has to go into a resistance or a supply zone. Some of you guys love drawing rising wedges, bear flags, bull flags in the middle of nowhere. It has to be at a level. Every chart pattern that you trade has to be at a level. If it's not at a level, then it's not valid. You want it at some type of level. So the rising wedge, you go up there, you hit resistance, and then you basically sells off, right? That's a rising wedge. A bear flag, pretty much the same thing. It just looks a little different. It's pretty much the same thing. So you have different ways of drawing it. So let me go over here a little bit. So we have an impulsive move down. It normally creates like a flag pattern like that, like an actual upside down flag pole. Boom, boom. So it's a little difference, nothing crazy. You treat them the same though, right there, right? What else? And this has to be a level as well. It has to be at a level. I'm gonna show them M in a minute. I got you. Look at this. It has to be at a level, that bear flag. It has to sell off, break a support level, most likely come back and retest that support level as resistance and sell off again, guys. That is how the patterns work. Some of you guys just draw it in the middle of nowhere, right? Okay, so let me hold on. One of my people said M, because I know he did just take M for like 400%. Oh, and I'm gonna show y'all a different bear flag in a minute too. Let me show you this rising wedge real quick. Oh, Sterling, you had a one of those rising wedges that I don't like the most, but those are actually like the real rising wedges. I think it's gonna look a little better on the 1 hour. No, it don't. I think it's the 4. It's a lot of candles. So this is another variation of a rising wedge. It ain't like mine. So this is one where you have an impulsive move up, right? So you have different ways of rising wedges. You have a one that goes like we just went over, where you have an impulsive move down, and then it rises into that resistance. And then you have other ones like this one where you have an impulsive move up. I'm not gonna lie to you. I don't like this one. And for me, I don't like this one, but it worked. This was a 400% return. I'm gonna just draw. I don't like it, so excuse me if I draw it ugly. I really don't like this one at all, but it worked. So it was ugly as hell though, but it worked. Oh, I don't know about this one. I ain't gonna lie to you. I don't like this. Yeah, send a picture in the chat because I don't really like. I remember when you said that you was taking it. I'm not a big fan of it. Maybe it looked better on TradingView, but yeah, stuff like that. So, but anyways, now let me go back to this one. Then you have another. So we just went over the first bear flag. Is it a bear flag? It looked like it's creating a bear. It's potentially creating a bear flag right now. Pretty much a bear flag right at the 9 EMA. Like we created one. Me personally, bear flags like this, I don't like. I personally like price to react like this. I actually want to see more candles inside to actually make that bear flag. This is kind of just like a move up. I mean, it still could be a bear flag as well, but I mean, yeah, I like more candles or just a little more. But I'm just picky on the trades that I take because I go in with a lot of size. Y'all get what I mean? So for me, I'm really picky on the patterns that I take. So that's just me personally. There's a personal preference. And I'm gonna show y'all some better bear flags in a minute. I actually got a good bear flag that hasn't even finished yet that we're gonna go over, that we're gonna try to catch for the rest of this week and next week. So here we go, back over on this side. So this is another variation of a bear flag. It kind of looks like a ascending triangle in a way, but this is a bear flag, however you want to say it, guys. It's pretty much one. I'm about to show you guys an example on the internet. Let me pause this real quick. Let me show you guys an example real quick. Bear flag pattern. Yep, here it is. Okay, now let me come back and bring the screen. And this is how I got good at chart patterns, guys. Okay, so do y'all see this bear flag right here? Do y'all see this? Now, I want y'all to get a good glimpse of this. Get a good glimpse, right? Get a good glimpse of this. And let's go back to our, y'all see that? I'm gonna say that real quick. Look at that real quick. I want everybody to go look at that. Impulsive move down, correction, right into that. Now we about to, let me share my screen again, new share. Let's go back to Thinkorswim. Now look, do y'all see that? Almost identical, right? So that's how you get good at it. There you go. That's how you get good at them. Just go on Google. If you think it's a pattern, go on Google until you find 1,000 patterns until it look like it. So a flag is a rectangle-ish. A pennant is more triangle-ish. Yeah, I guess you could put it that way. A flag is more rectangle to me. A flag is more like a rectangle, kind of like a slanted rectangle, and a pennant is more like triangles or whatever. Somebody said it like a wedge. I don't know. Yeah, I don't know. Are you talking about this or are you talking about that? Which one are you talking about, on the right or the left? No. Look more like a bird fly to me. But okay, so, and I'm gonna go over the other stuff in a minute. So as far as day trading, that's kind of what I like to do. I like to find, so to write it down in your notes so you can have some for your notes. I like to first I like to see if I can find a trend line, right? That's kind of one of the things that I look for, especially in this market. Those have been the most profitable for me. Number one, you want to find a trend line on something, right? It don't matter what time, because somebody asked me, Jay, what's the best time frames? Literally, you can find them on any time frame and just pick out what time frame you want to trade on. So like when we go back to AMD, one of the trades that I caught on AMD was the trend line, right? So I found this trend line on the daily time frame. So here we go. Oh, I'm gonna show you that's a bear flag if you didn't know. So here we go. We draw the trend line. Here we go. On a daily time frame, we're looking for 3 touches. We have 1 touch, 2, 3, 4. If you wanted to, you could actually do like this. It kind of went up a little bit. And what helps if you draw in trend lines, if you want to go to the bigger time frame. So for this one, this is real life. I actually really had to go on, the weekly chart for AMB because it's a daily chart that I found the trend line on, but I went to the weekly chart just to see if the trend line made sense. And here we go. Yep, it made sense. We had a rejection here, rejection here, rejection here, and rejection here. Y'all see that? Do I need to draw it? Do I need to circle them? Or y'all can see, I think y'all will be good. I think y'all are all right. So there we go. I see my trend line. So I knew we got a trend line, right? So that's one thing that I'm looking for in day trading. I'm looking for a trend line, right? So put that in your notes, a trend line. Next, I'm looking for a chart pattern, right? Some type of chart pattern. Me personally, chart pattern. That's kind of the first, my go-tos are first is chart patterns. And if not chart patterns, I'm looking for support and resistance levels to kind of see if it's key levels, if it's rejecting, or supply and demand zones. And next, I'm looking at a stock that represents it, not represents it. Let me get that out. I'm trying to talk too fast. Trend line first. I'm looking for a trend line, chart pattern, support and resistance, or supply and demand. Then I'm looking at a stock or an ETF that follows or, the stock mirrors, right? So for example, I said this in class yesterday. If I'm looking at Apple, what is a stock that I would look at if I'm trading Apple? It might not have to be an ETF, but just overall, what is something? You got QQQ. What else? What else could I look at? You can literally look at it. They all gonna look the same, but you got QQQ, Microsoft. If I'm looking at Home Depot, what is something I can look at for Home Depot? The Dow, right? I mean, the Dow and Lowe's, right? So those are things that I'm doing. As I'm trading the stock, I like looking at something else that follows that stock or that stock mirrors, right? So if I see something bearish on both of them, that gives me that extra confirmation. Do that make sense? If I'm looking at Baba, what am I looking at? Baidu, right? Well, I'm looking at a Chinese ETF that has those stocks in it. How do you know if a stock is in an ETF? The best way, if you don't know it already, just go on Google. Just go on Google. That's how I found XOP. Like literally, just go on ETF.com. I think Lawrence just said something about this yesterday, right? Just go on there, just to have the extra confirmation. I'm not saying trade the ETF or trade it. Just look on there, right? Yep, look at stocks in that sector. You can literally look at anything, guys. You literally can look at anything that you want to look at just to give you a better confirmation in trading. We just want more confirmation, right? Sometimes you will see, I actually caught a Tesla trade recently where the NASDAQ was, actually, matter of fact, let me tell you how this works so well. I don't even feel like going back to the chart, but I'm gonna just explain to you how this works so well, right? Tesla was like kind of like moving down, but it was kind of not ready to break yet, right? What made me not get in that Tesla trade was because NASDAQ was in a balanced period. It was consolidating. So what I did with Tesla was I waited for the NASDAQ to break down. Then I took Tesla puts and I got a good entry. My friend, my homeboy Isaac, he took Tesla, but he ended up getting out on that trade early because it was like, the NASDAQ was chopping around and he ended up selling early because he didn't know if it was going to go up and down. But if he had the ETF up and if he had something else other than just looking at Tesla charts alone, he would have realized, oh man, I just got in Tesla a little too early. NASDAQ is consolidating. Once it breaks this consolidation, then I could go ahead and take Tesla puts. So what happened? I took Tesla puts. It went up like 40%. Yeah, pulled back. It is what it is. But overall, yeah, you can use QQQ. Tesla's the tech stock, right? So do that make sense? Just so everybody understand, like, is that kind of like, is it making sense? I try to keep trading simple. This is what helps, right? It helps using that. I don't know how people still trade off of one chart nowadays. It's just too much noise. You need that extra help. You need that edge. That's my edge. If people ask me, Jay, what's your edge in the market? That's my edge. My edge is to be able to identify chart patterns as fast as I can and be able to use different charts, different sister stocks to make a trade, right? If I'm trading AMD, what am I looking at to trade AMD? NVIDIA, right? I'm using NVIDIA, right? So you use indexes. Hold on. Yep, you can use MU, QCOM, whatever if you want to have all of them up, that's totally fine. I think one of y'all things went away. I think somebody just asked me, so do I use indexes before I trade any company? Yes, I like to use it before I trade any company. But yeah, like also if you go on Google or ETF.com, if AMD is in other ETFs, you can go look at those other ETFs. They're going to be showing the same thing, guys. Most of the time, 90% of the time, they're going to be showing that the chart's going to look very similar. So it really don't matter which one you look at, but you obviously want to go with the major ones, right? What do you recommend for people to remember charts? Good one. So actually what I did was I went on Google and they have like chart patterns cheat sheets. And what I did was I printed off pretty much all of the main ones. So like 3 of them, I can see you which ones I printed off, but I printed off like 3 of them and I put it on my desk, right? My trading desk. And I literally, as I'm trading, I'm like looking at those, right? So as I'm looking at a chart, right, I'm looking to see if I can find any of these on this chart. And after time, it got so, like when I say it just clicks. It's crazy how chart pattern, chart recognition clicks. Like you go from one day to not seeing them to seeing them. Like it's crazy. Anybody in here that know what I'm talking about that's been doing trading for a minute, did y'all kind of have the same thing? Yes or no? Like it's just like you just kept practicing it. Then you just woke up one day and it just clicked. Like you start seeing everything. Like it literally, it's crazy how it happens. But guys, there's no shortcuts to it. You have to do the work, right? You have to do the work. You have to do the work, right? You want to know chart patterns. You want to know how to trade. You have to do the work. I'm so sorry, guys. Some of Zoom, we're gonna have to short. Okay, I just had it. We're gonna have to short Zoom tomorrow because some of y'all, like when y'all asking the question, some of y'all typing so fast that I can't see. Okay, I caught it. All right, let me answer some of these questions while I caught it. Um, so do I use indexes before hopping in the trade? 90% of the times I do. The times that I don't, those are the times that I'm most likely going to lose that trade. So just being honest with you guys, I don't do it every single time, but my losing streak tells you that tells you right there. If I don't do it every time, I end up losing. So I recommend doing it every time before you jump in the trade. Look at the indexes, look at those sister stocks, right? Trade with other charts. Okay, hold on. Which is the more powerful? Which is the ETF or the stock? Um, I'm gonna say if we being honest, I'm gonna say the ETF, and the main reason why is because think of the ETF as a uh like a chain in the ball effect, right? So like let's say that you know, okay, let's not. I don't even know how to explain it in a normal way. But let's say that I'm trying to climb up. I'm trying to climb up some rocks, right? I'm trying to climb up a wall. And right now I can climb up a wall picking up my weight easily. But then somebody say, all right, Jay, I'm gonna add this weight vest on you. Now it's gonna be harder for me to climb that wall. So think of the indexes like that, right? Think of them like that, right? So if you see a stock doing something and the ETF is showing you that it's coming down, and the stock is kind of like consolidating or is just staying where it's at, it ain't really moving, or even if it's going up, think of it as the index is eventually, the index is going to bring it down. So that kind of like, I would say that's more powerful, right? I don't know if that made sense. That's like the best kind of way I got it right now. But that's like how I think of it. The index eventually going to bring it down. So like, for example, if Apple is pushing or just consolidating, but NASDAQ or the S&P 500 is coming down, why the hell are you still in calls? You know what I mean? Like, it's just like, that's kind of like a thing. Like, why are you still in calls? If you're still in calls, you might make a couple dollars, but at the same time, that's risky as hell, right? The index is falling. Eventually, Apple's going to come down with it. So that gives me confirmation I need to get out. You know what I'm saying? So using those indexes, you can kind of follow it. It gives you a better trade. It gives you a less stress trade, a less, y'all know what I mean. Yep, SPY. Can you give us more? I'll give it at the end on the boot camp and stuff like that. I recommend identifying them. Yep. Say that last part again. I don't even know which last part I was supposed to say, but remind me. Can you put the ETFs in as I can put different ETFs that I use. An example. If you are already in a mentorship, if you go back to, I'm gonna find the class, but I had a class where I went over all the ETFs. And we can go back into, you could do that one as well. I actually have a whole class on the different ETFs and like different stocks that are in that ETF. I forgot which one it is, but I'll make sure to upload that as well. The stronger moves when everything. Yep. That's what I'm saying. Trading for me, the best trades come from when everything lines up, right? If my indexes just follow me, and I'm following the indexes, those are the best trades. The hard trades are when you going against the indexes, right? You and Apple calls when NASDAQ is dropping. You know what I mean? So like, make it make sense, guys. Any questions on this so far? I was gonna show y'all some more examples and stuff. Any more questions? I hope I'm making sense right now. Yeah, I got you. Okay. So same thing here. When we look at AMD, here we go. We have a bear flag. Excuse all my language, but y'all see this bear flag? Do everybody see it? We had to do this bear flag before it even broke down. Come on, y'all. Come on, y'all. We've been in it. We've been seeing this bear flag. Bear flag at the trail line rejection. Come on, take it down. Take them down. We didn't see this bear flag since it was right here at $99. It's at 86 right now. It went all the way to 85, right? Come on, what more confirmation do y'all need? But hold on. Did AMD touch the low yet? Did AMD touch the low? Nah, right? So AMD still got the down. What I say, that low is the magnet. AMD still got downside, y'all. Right? But look, let's check this out. Let's check the trade out, though. Rejection, 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 rejection. Right? What more confirmation do you need? What happened? Stochastics indicator. What did it show us? What did it show us? Death cross, right? Momentum shifting to the downside, right? It showed us this at an early sign, right? That's why I like it a little more better. Okay, so back to trailer. I might have a class over this tomorrow anyway to draw more of them. But you want to have 3 touches, not 2, not 1, 3. 3 touches to make a valid trend line. I don't care what nobody else tell you. You need 3 touches, guys. 3 touches. This ain't something that I just learned. No, this is coming from traders that's been trading the game for 20 plus years. 3 touches. Listen to them. They've been in the game longer. If anybody else tell you otherwise, no, don't do it. 3 touches make a valid trend line. How do we know where the last low? Can you explain that a little bit? I don't know exactly. The last low. I don't know. If it's not too personal, you mind sharing one of your journal entries or example of one? My journal entries, like kind of how I wrote it down. Is that what you're asking? Have I ever had a bear flag reverse on me on the lower time frames? Never. I've never had a bear flag reverse on me on the bigger time frames. On the lower time frames, yes. How does active trader set up? How does your so I haven't been using active trader that much. I will have a class over active trader. So just be on the lookout for that one, but I haven't been using it at all. But this is your active trader right here on the right. And it's pretty much like that. But I actually got a class on that because I'm actually going back to using active trader soon. So that's why I'm gonna just go ahead and do a class. I've been meaning to do an active trader class for a minute. I think they're referring to the lowest support level. I got the lowest. You said it's not. Oh, how do I know? Oh, yeah, good question. So the question was, how do I know? Because I literally just said that. Damn, what just happened? Oh, this look ugly. Okay, let me go to one chart so I can show y'all AMD. So let's go. So somebody just asked me, how do I know? Because I just said AMD is not finished yet. How do I know that it's not the last low? Like it's not the low yet. So when class first started, and I've been teaching this for a minute, I'm not gonna lie, I've been doing this type of stuff for a while now, and I've like this has literally been money ever since I've been doing it. So let's zoom in real quick. Okay, so how do I know the last low? So the last low when it comes to a chart pattern is the lowest candle in like, so whenever you add all of these candles together to make this pattern, the lowest point, this is for a bear flag, the lowest point that a candle has ever came is normally a magnet to the stock price, right? So that means this low right here, can everybody see this low right here, this wick right here? Can everybody see this? That's the lowest point in this bear flag. So that's normally where the stock price is going to go. It's going to go all the way to that low 90% of the time. Like I said, nothing is 100%, but I've been doing this for a minute, and that's pretty much how I get my price targets. As far as when I'm taking setups like this, it's normally that lowest low. For example, we're going to say it now. You know, this might be a bold step. Yeah, this is 83. Yeah, basically 83.20. So let's go here, CVX. Let me show y'all another bear flag. Let's get another bear flag real quick on, was it CVX? Yeah, it was. Okay, so Maybe it look a little better on the 4-hour. Yeah, here it is. So right here, we have another bear flag. This is a bigger one. It look a little better on a daily time frame, actually, but I'm about to show y'all real quick. So this one is I don't trade bear flags like this. Shine do like Shine like to trade bear flags like this, Isaac. But I'm just showing you guys for training purposes. Let me go to the daily. It might look a little better. See, I play around with time frames until it look better to me, like what time frame it looks better on. So like for me on a weekly chart, it don't look good to me. So I'm gonna tell y'all why I don't like it, but I got y'all. So for here, if this is a valid, I'm just being honest, if this is a valid, for me, I probably wouldn't trade this just yet. But come on, TOS. All right. For me, I'm gonna say I don't really like bear flags like this. I like a more. I don't like how it came all the way up like that. But a lot of traders trade bear flags like this. So and they work. So I'm about to show you real quick. For me, I will never trade a bear flag that broke. The top of the. So we got the impulsive move down. A bear flag, something that breaks above that level. For me, that is I don't like that. I don't. These are very rare, but this is a bear flag, right? This is a bear flag. So, but these are very rare. But if we do, if this is right, we have our bear flag. Then this lowest point right here will be our target right here, right? We can see how I play. Somebody said it looked more like a Nike check. We'll see how I play out. I'm just saying, let me be transparent, right? I don't like the way this looks. I'm telling you that now, but I'm just showing you just because you have different types of bear flags. I hate the way this looks. I probably would not trade this, but if I do, I probably won't put this. This is not a bear flag that I will probably take a 50K trade in. Me personally, you might, but me personally, this is probably if I do take it, it might be $1,000, maybe $5,000 max, just because I want my pole to be higher. But overall, this is a resistance zone. It's actually rejecting all-time highs. So that's why you don't really see the levels as good, but this is all-time high resistance level. And then we broke to the downside. So, I do believe that we can, if this is a valid bear flag to the market, I do believe we can see 150, 150 on Chevron. Yeah, all-time high. Yeah, it's rejecting all-time highs, right? It shuts all-time highs now, selling off from all-time highs. When would you know to enter AMD? So I would have personally, my best setups come from entering AMD on that trend line rejection with the bear flag, right? This is kind of where I would have liked to enter. I take a lot of my trades like this because of the risk to reward. So I would have liked to take AMD as soon as it was rejecting this area and then took it down. But I actually took AMD from 99.75 and I wrote it down to that 95, 94 level. And then I could have took it again under 94, but AMD was chopping that day and I didn't take it. But as you can see, we gapped down. But overall, I'm normally taking it below just regular support and resistance levels as it's in that pattern. So it's the daily time frame. So obviously it will be hard to hold this whole thing. So every time we get to a new level, I just take it below the new one. That's pretty much how I do that. And we'll get more into that. But I'm just trying to get you guys to kind of see my eyes and just kind of see what I look for into trades. Oh, that was another question. My bad. Somebody asked me, what did they ask me? Oh, do you have go-to stocks or fixed list of stocks that I have in rotation? So yes, I do have a select list of stocks that I like to trade. I did put it on my Instagram. If you have my Instagram, I did put the stocks that I like. But generally, guys, how I find stocks to trade, I don't use scanners or anything. I normally, since I journal a lot of my trades, what I normally do is when I journal my trades. So normally stocks that I have a high success rate on, I trade those a lot. So stocks that I have a very high success rate on is Tesla. That's why I got the nickname. I have a very high success rate on Tesla. Most people know, not to sound cocky or anything, but if I'm in Tesla, 90% of the time it's going to be a winner. That's just kind of one of the stocks that I have a high success rate on. Apple is another one. This kind of like my go-tos. Mainly I trade like the main normal stocks like, Apple, Boeing, Nvidia, Tesla, AMD, kind of like the regular ones, nice Greeks, nice contracts, stuff like that. Amazon, I don't like Amazon right now after the stock split. So unfortunately, Amazon is off my list. I'm not really a big fan of Facebook after they dropped so much during that earnings. I did like Roku before as well. Stuff like that. Snow is fine. It really just depends, guys. Like I don't really have, I'm not really strict about the stocks I trade. I just pretty much trade the main stocks. It's not really nothing crazy. I just, rotate between them. Normally what happens is over the weekend, when I normally build my watch list for the week, all I'm really doing is just going around different stocks and just kind of like looking at their charts, seeing if I can see something that I like, that I qualify as an A+ setup. So like sometimes I'm just being honest. Sometimes I have my friends over or whatever, and if I'm charting, I'd be like, hey, give me a company, because there are times where I would just trade a random company. Like one time when I was in Texas, when we went furniture shopping, we had went to this store called Love Sack, and we got some Love Sacks and I actually had looked. I was like, I wonder is Love Sack a stock? And I looked on their charts, and it actually was something I liked on their charts, so I traded Love Sack. So it just depends. Or like if I go to Walmart or Target, I'm like being so honest. Like I don't know. I don't have like a scanner or anything. I just trade the charts. If I see something that I like on the charts, I'm gonna trade it. Now I am a contract person, right? I do love flipping contracts or whatever. That's one of my go-tos. I love flipping contracts. So I do look for the best contracts, in my opinion, that's going to make me the most money. And we have another class, I think that's next week, where we go over how I like to pick contracts. But I do like, after I'm looking at the stock, I'm looking at the contracts as well. So if we had charted AMD the night before it gapped down pre-market, what do we look for to get in the trade? So let's go back to AMD before it gapped down. Where did it gap down? Okay. So let's say before AMD gap down, delete all that. So I'm on an hourly chart. That's normally where if I were to swing or anything, because it was a gap down, so you wouldn't have caught the move in the first place unless you had swung it. So let's just see if we can find anything. I didn't swing this, but real quick, let's see if we can find anything that gave us an indication that we were going to drop down on like we could swing AMD. Okay, so the gap down happened here. This is the gap down. So we gapped from 948 to 9. So we gapped pretty much $4, maybe $5. So real quick, is there anything on this chart before that gap down that indicated that we were going to gap down in this area, or indicated that it was just to keep running puts? Yep, we got a bear flag, right? Also, what else? Still below the 9 EMA, right? So as you as a trader, you see that on an hourly time frame, we had an impulsive move down, correction. We didn't have the next impulsive move down, but obviously we could take the swing. We're still below the 9 EMA. Go ahead and swing that trade. Here you go. You wake up that morning, you are up, 400, 300%, however much this was, right? Did that make sense to the person that just asked? The reason why I showed you that, because like you wouldn't have caught it because they had already gapped down. So you would have had to see if it was anything before the gap down. Did you see it now? Did that make sense to anybody else that didn't ask about it? So now somebody asked, what if we wanted to take it in the morning? So Now let's go if we wanted to take it in the morning. So now in the morning. So now let's act like none of this happened. So let's get that opening price. The opening price was on this candle was 90.50. So let's go find 90.50 on this chart. Okay, so we have 90.50 right here. So, and I'm sorry, I'm not doing this I'm showing you, I'm not doing this just because it already happened. I'm just showing you exactly how I would have took it. You guys know I take a stock above the what do you call it? What is it called? Above the opening price. So how am I finding the opening price? This day, AMD open. I'm hovering over this candle. You can see it at this corner up here. So I'm hovering over this candle. AMD opened at 90.50 this day, pretty much. So we're gonna go plot that. 90.50. Here we go. I make those levels blue so I know that that's the opening price. Right? So I plotted that opening price. As you can see, price tried to break above. We could not break above. We end up wicking still below the 9 EMA. Then as you can see, as we sold back off, you can go ahead and take this, right? You can go ahead and take it down. As you see it's resisting again. Here we go. You can go ahead and take it down because, and your stop loss will be as long as it breaks above, as long as it don't break above opening price and closes, that's how you know. But I'm not gonna lie, this trade would have been hard. I know people actually took this trade. This one would have been kind of hard because as you can see, price did close above on different time frames. So that's why this particular trade would have been hard. And this is why I stress using multiple time frames to kind of help you. If you're not using multiple time frames, then you probably would have fell for this. But if you were using multiple ones, you probably wouldn't have. So right here, that's why I use multiple time frame analysis. So I got the hourly up. I got the 15-minute up. I'm not taking trades off the 5-minute. You can forget that. We can go on the 10-minute. That's the lower we can go, but I'm not doing the 5-minute. So go here. Let's zoom in. I execute. It depends. If I'm day trading, it really, for me, it depends. If I see a lot of downside, I will actually execute off the hourly chart. And if I see, like more like a real day trade, I'm gonna execute off the 10-minute or the 15-minute. But yes, I do execute off the hourly. But look, so here we go. We got that opening price. Hold on. This opening was weird. Hold on. I don't know. Anyways, I can't even remember because this trade was this was an old trade. So I can't even remember. But whatever the opening price is, if we're rejecting the opening price, we take it below the opening price. If it did above the opening price, so let's say we opened up and we ran up. So now if we run up and we can't hold, if we break back below, I'm short under the opening price. And I can get more in detail on this, but overall, that's kind of how I do it. So to put this in your notes, if we break above the opening price intraday, if we break back below, I'm taking puts. If we break back below that opening price, I'm literally using that opening price. So in the mornings, I normally go on Robinhood and wherever the stock opened up at, it'll tell you on the opening. I just plot that level and I call that my level of the day, right? So if we close above that opening price and we break above it, but then we end up rejecting whatever and come back down, as soon as we break back below that opening price, I'm short, right? If the market is bearish, right? You still want to use other indications. If your indexes or your sister stocks coming down, we lose that opening price, I'm short, right? I want to take puts at that break of that opening price. Took it down normally to your support and resistance levels, and then there you go. As you can see, we came back up, kind of tested this opening price again, rejected again, right? So that's a little ways to do it. Like I said, this day would have been kind of hard to take it simply because, we closed it above, made you think long, but then we ended up pulling right back on you. This happens sometimes, guys. You just got to cut that loss and just kind of move on. Normally what happens is if the market, that's just why I don't like trading the first couple minutes of the market being open, because you have a lot of stuff like this. That's just me personally. I know I suck at trading the open, so that's why I kind of just leave that alone. So me personally, I probably would have caught it here as we retested that opening price and rejected again. That's more my style. I'm not really I'm not really a like kind of chasing it kind of thing. I would have took it as it came back to test this opening price, right? It tested it again, and this is probably where I would have took entry. Me personally, you don't have to do it this way, but me personally, I would have took it as we retested this area again and then took short. How does the hourly help you stay in the trade? Less noise, bigger candles. That's all it is. Whenever I'm saying I'm using these bigger time frames, it's just bigger candles, right? You see all of these candles, and then when you come to the hourly, you know, that particular day, it was less noise. You get what I'm saying? So that's kind of the best way to put it. It was a little less noise. That's all. Yes. Somebody asked me. So the question was, so you don't wait for it to close below, you enter as soon as it drop back. So look, okay, I'm glad you asked that. So somebody asked me, do I actually wait for a stock to close below, or do I get in as soon as it drop? It depends. That is why I like using the EFTs, the indexes, because like let's say that the index is falling, right? And then the stock is finally breaking that level. Most of the time, I'm gonna just take that trade. I'm not gonna wait for a close below, right? Because I have that extra confirmation. But let's say that maybe if I'm taking a trade, which you're not supposed to, but let's just say I am, right? Because times we ain't disciplined all the time. Let's say that I take a trade without the indexes, then I'm gonna wait for a close below or a close above, however you want to put it. Did that make sense? So that's kind of like I'm using those indexes to kind of time my entry as well. But yeah. Now, as far as stop losses, either a percentage stop loss or you can do like a a close above. So if I'm taking puts because it's rejecting this 90.5 level, then that means that if it breaks back above, that's the only time that I would cut. So literally, if I'm taking this trade here, if I'm entering here off of this rejection here, right, then my stop loss will only be if we close back above there, right? It's because that's the reason. If the reason why you got in is no longer valid, that means cut the trade. So as you can see, I'm taking a rejection here. So the only way I'm cutting this trade is if it closes above. Yes, a close, not a wick, right? Not a wick, a close, right? And I hope that made sense. Can you quickly plot a stock you will be looking at for the next day? All right, cool. So actually, I'm actually looking at Exxon. So how I would do this is, the reason why I'm looking at it is just because I think we have more downside. So I will come to Exxon. Actually, let me do something different. Let me do a stock that we haven't already plotted, but I am looking at Exxon tomorrow. I'll come back to this. Somebody give me a stock. Let's just see. I just want to see randomly. Somebody give me a stock for tomorrow. Somebody give me a stock for tomorrow. Apple. I'm gonna just do the first one I see. Apple. So Apple. So first I want to go look at Apple opening price, right? Let's see if it fit the criteria. So open price. So Apple opened at 133.14. So how I do this is I come down, to my hourly chart or whatever time frame I want to be on. Mainly, I just plot it on my hourly chart. Hold on, I'm gonna get you that questions in a minute. Yeah, I go to Robinhood, guys. I just keep it on Robinhood. It's already right there in my face. So let me extend that. Okay, so this is I'm telling y'all, this is exactly how I would do it. So, because you can do, if you don't like, I'm gonna show you different ways to do it. But overall, if the stock price is below the opening price of the previous day, then that's going to be your trigger. If the stock price is above the opening price of today, then you're going to make a new trigger that morning. Did that make sense? So, like for example, Apple right now, the opening price for today was 133.14. Apple is currently at 132.76. So what does that mean? Apple is below the opening price. So that's going to be my trigger in the morning, is that opening price. Does that make sense? Not what it opens at tomorrow. It's going to be the opening price that it, didn't close above today. Did that make sense? Just making sure I don't lose somebody on that. Okay. So Apple is below. Somebody said nah, so let me repeat it one more time. So I went on Robinhood. Today, Apple opened at 133.14, right? Apple right now, because I'm looking for it tomorrow. This is for a trade tomorrow. So let me go. I'm gonna just plot it for you guys. I go to the 10-minute just to kind of, you can see the candles a little better. Hold on. And I actually can show y'all a trade that I took similar like this. Okay, here we go. So remember, when we look on Robinhood or wherever you want to look at, Apple opened at 133.14. So I'm going to go plot that level at 133.14. Right? Let me go ahead and change it. Like, you want to get, it has to be perfect. Like, you can't say, oh, I'm gonna be lazy and I'm gonna put it at 133.12. No, if it opened at 133.14, you were to go in here and put 133.14. So as you can see, look how we respected that open all day long. Look how I respected that open. Look how that open played a nice resistance all day long. Every time it tried to break this level, rejected, 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 right? So now you have different things, but yeah, I got 14. Like, hey, I'll just use Robinhood. But that's crazy. TV opening price is off by a few cents. It's crazy that y'all saying that, because I did notice that on TOS. I mean, TD, that the opening prices be kind of different on different platforms. Look, I just do Robinhood. So, and Robinhood has been working so well for me. So whatever you decide to do, I just do that. Wait, so you wait for that 10-minute or the 15-minute to close in order. It depends on the trade. But I'm just plotting the opening price. So I could be on the 5-minute, whatever. I'm just plotting the opening price, right? So here we go. The opening price is 133.14, right? So if Apple breaks that level tomorrow, I'm long, right? Now, right now, we are actually breaking that level in pre-market right now. So once we do that, then you can have, if it opens up above 133.14, then you use that new day closing price. I'm not trying to confuse y'all, trying to make sure everybody understands. So let me repeat this one more time. Right now, my trigger for Apple is 133.14, right? Let's say that tomorrow Apple opens up above 133.14. Then I'm going to use that day's opening price, right? So these opening prices are still valid until they break. So a good example of this, let me show y'all real quick, is Boeing. I caught Boeing today. Let me show you how I did it. Let's go to Boeing, right? Exactly how I caught Boeing. I used this. So if you think this is BS, this is exactly how I caught Boeing today. No gimmicks, no games. Exactly how I caught Boeing, right? I made $2,000 off of this trade. This trade went 100 and what was it? 134%, I believe, something like that. I wasn't supposed to trade today, but I did it anyway. Because I was looking at Boeing, I was just like, okay, it is going to break that opening price. It looked kind of good, so I'm going to just take it. But let me show y'all. So here we go. What is that opening? This is that opening price. Go look at Robinhood. What did Boeing open up at today? It opened up at 116.65. So I see that SPY is starting to reverse and start to push up. So I'm taking Boeing, right? Boeing looks strong. You know, we breaking out. I mean, we coming up. We broke this level. I'm in Boeing. Look at that. It went up and hit my target. I literally used the opening price to take this trade. So you always use the previous day's highs. Previous day's highs for what? As a level of support? I mean, as a level. So this trade, I didn't know this. That's why I say you have certain trades that you can wait. This trade, I did not wait for the close. I just took this trade on a long candle like this. And so it just depends on the type of things that you have. But let me walk you through exactly all the confirmations I have for this trade to make me take it. Well, number one, the market was kind of starting to push up a little bit at this time. What did the momentum do before we broke, guys? What did the momentum do before we broke? What did the momentum do? Golden cross, right? What is volume doing? What is volume doing? Increasing, right? Boom, there we go. I'm clicking the trade. What else do we have? Look, 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 look. Check this out. Y'all forgetting one more thing. Look, what else we have? Another golden cross, right? So now that's all my confirmation. We break above that opening price. I'm in. Boom, 134%. That quick. 134%. Now, did I catch the whole 134%? No, I did not. But I did get out of a good exit, right? I actually got out. This was actually this target, even though it's crazy, this target was here before it. I don't want y'all thinking I just be making these targets out of random. This one was already here. Sold into strength, and I ain't even get caught in this pullback. But I ain't gonna lie, if you held this pullback, it was fine because they held the 9 EMA. These premiums held, right? And it went 130-some%, right? I'm using the 9 EMA and the 21. And I know this sounds like a lot right now, but guys, it's not. It's not. I'm telling you right now, it's not that hard. It's not that. I'm telling you right now, it's not that hard. You got the opening price. Take longs above the opening price. If the indexes are pushing with it, boom, you got you a nice trade. And I do this all the time. Every time we get on class, I'm going to always show you an example if I took a trade like this. Do you ever erase? Yes, I normally erase. So like for tomorrow, right? Boeing broke this open. So now I'm done with Boeing. I'm done with this 1665 level. I'm deleting it. I don't need it no more. This is an actual level. So I need that, but I don't need that opening price no more because Boeing already broke it. I don't need it no more, right? So now for me to take Boeing tomorrow, guess what? What happened? Can anybody, I just went over there. So can anybody tell me how I'm going to take Boeing tomorrow? If I want to take Boeing calls, can anybody tell me? I'm going to plot the new opening, right? So I'm going to take it above that opening, right? I'm going to take it above the new opening because we already broke today's opening, right? Tomorrow's opening price. There we go. Y'all starting to understand it now. There we go. There we go. Sorry, guys. Some of y'all questions. Zoom doing that annoying thing again. Okay, I might be able to get it. Oh, man. Hold on. Somebody else type something real quick. It might can give me the cursor back. I hate Zoom so much. No, I missed it. Somebody says so. Okay, I got it. I hate Zoom so much. We shorten this thing. Already answered that. Do you keep opening prices until do you keep opening price the next day until it breaks? Yes. So if Boeing never broke that 116.65, I would still keep it on my charts because it still hasn't been hit yet. And we did an example of this. NVIDIA had opening price was literally, I'm gonna go back to a trade like that if I can remember. But NVIDIA, when I say I left that opening price on the chart, NVIDIA opening price was, I think, 189.80. Actually, yeah, let's go to that real quick. Let me show you why I don't delete the opening price until it's broken. Let's look at this trade. I remember I showed y'all this a while back, but look at this trade right here. This is a trade that we took on NVIDIA. Where is it at? Let me just plot it right here. 89. Was it 89.80, I believe? I'm about to show y'all why y'all want to leave those opening prices on your charts. 89.80. I got to find it. And hold on, let me find it for you guys. Okay, let's go here. Okay. Okay, here you go. Right here. This was that money trade that we was talking about. For the people that want to delete your opening prices when they haven't been breached yet, this opening price, let me plot it real quick. I'm going to show you where it came from. Here we go. 89.80. So this one came from here. This is the opening price. Do y'all see that? Real quick. I'm going to go back to y'all questions in a minute, but I'm just trying to show you. Do y'all see right here? Look. Hold on. Y'all see this opening price right here? On this candle, this is that opening price. 89.80. Right? I got an 89.82. Y'all get what I'm saying, though. Look how, hold on. 89.80. Hold on. Okay, yeah, here it is. I actually want to go to a lower time frame. I think we have more rejections there. Hold on. Something off. Something is off. No, that's not it. Something is off. I don't think that. I thought we had more rejections than that. Was it this one? Hold on, guys. My bad, y'all. This is an old trade. I'm just trying to show y'all something. Because I feel like we had more rejections than that. 89.80. 89.80. Did we not? Okay, I guess we didn't. I guess that was only one. I don't remember. This trade was old. But anyways, here we go. You took the trade above opening price, guys. That 89.80. As you can see, we couldn't break above the opening price that day. We sold all the way off. But guess what? The next day, we still got the opening price up, right? Because it has never been breached yet. So what happens when it breaks that opening price, guys? What happened? As soon as it broke the opening price, what happened? It went crazy, right? It went crazy as soon as it broke it. It went crazy, right? Look at that. As soon as it broke, it literally took off. You take entries. You know, you would probably been on a smaller time frame because this was definitely a day trade. Let me see if I can go back to that trade. Let me go on a 15-minute to get y'all kind of like a better example, a little better on the charts. There we go. Here it is. So I'm gonna give y'all actually how this trade really played out. So right here. Okay, here it is. Actually, no. Check this out. My bad. All right, here we go. Not to confuse nobody, but look, check this out. Now we're in a lower time frame. I knew I wouldn't trip. I'm like, no, I remember we rejected this level more than once. So here we go. This is, y'all see this now. Do y'all see it? This is the opening price here. We literally couldn't break and hold above this opening price for 2 days, right? So then we finally did. What happened? It sent. So right here, we opened at 89.80, right? That was the opening price. Boom. We sold off from it, rejected, couldn't break it, rejected, couldn't hold above it, rejected, tried it again the next day. What do we look how money that is? I actually took puts here. I don't know if y'all remember. I signaled NVIDIA puts, right? Look what level that was. Look what level that was, guys. That was the opening price that it rejected. This is money. Look how perfectly it rejected that opening price. This is the previous, it never broke it. So it rejected it. I took shorts here because I'm like, oh, it's rejected. I took shorts. The market was coming down. I had that confirmation from looking at AMD and QQQ. We were rejecting, right? Boom, I took shorts. Now look, we retested that level again. What did we create at this level? What did we create? Hold on, I gotta go find it again. I lost it. Where did it go? Okay, here we go. You call it a flag, but this is really, they call it a bull pennant. Right there. That's how they gave you the extra confirmation right at that level. As you can see, the other times we didn't get no actual, consolidation or no pattern. We just kind of just wicked above it but we had a pattern here. You can take it on the break. The market actually was sending it this time, and it sent. This trade went to, if I can believe correctly, this is a $12,000 trade right here. Yep, I remember this one now. I didn't catch it, but I had a mentee that did, and they made $12,000 on it. This was 200 and something percent. So, y'all get what I'm saying? Using those opening prices. Are there any indicators that it will send and not just chop around below that level, below the opening price? Would that be shown in the volume? So you can look at volume, but normally what happens is you want to see some type of chart pattern. So we had an impulsive move up, and we had like a little mini pullback into correction, created like a little bull pennant pattern, and then we broke above. So like you see right here, I mean, you kind of didn't really have no indication to take longs. You didn't really have any patterns or anything. You just had price rejected. Pretty much the same thing here. If we being honest, this kind of created, I'm about to try to draw it. It might not be there. You know, it might be a rising wedge here. Who knows? You got to draw it to see it. Nah, I'm not going to draw that. You had just a trend line break, if you're being honest. How many contracts did that person buy? It was like 200%. So I don't know how many contracts they bought, but it was like 200% of 12, whatever that is, 12,000 divided by 200%. But I remember they had sent me a screenshot. So would you exit once it breaks below the 9 EMA? Yep. Or if it hits your target, that's when you will exit once it hits your price targets. Your price targets are your next levels of support and resistance. Okay, let me try to hurry up and get it. I think 6K. Oh yeah, they put up 6K to make 12,000. Yep, 200%. Like 6K, maybe like 5 something, because it was like over 200%. It was like 212, I believe. So do we use the same strategy when the candle closes below previous day's closing? Price hop in. Yep. If the level is not yep. So you can hop in puts if you want to. Yep. I use so that's why I don't want to say the opening price is only for calls. That's why I call it the level of the day. Whenever y'all hear me say level of the day, that's what I'm referring to. That's the level of the day. So that level can, show us calls or puts, depending on how we're looking at it. It can break below that level, and then it can reject that level, and you take puts there. It's a lot, right? Man, you make the trades look so easy. I mean, I try to keep it simple. I wouldn't say that trading is easy, but I try to keep it as simple as possible. I think people make trading really confusing, so I pretty much just try to make it as simple as possible, right? I take the things that look simple to me. A lot of you guys take trades that look confusing as hell. Like I would literally be looking at y'all charts, and I'm like, bro, why are you taking this trade? Like you making your life harder, right? If it ain't clear to me, I'm not taking it. I'm not taking it. I take clear setups. If it ain't clear, I don't want it. I don't want to risk. This is how I look at it. If I'm risking my money, if I'm putting my money on a line, it has to be something that looks good enough or looks right. I want it to look right. If you about to think about it, you go out to eat and they bring you your food and it look nasty or it don't look right, what you gonna do? You're gonna tell them to take it back. You're gonna tell them to take it back. So treat your trades the same way. Why am I trading that if it don't look right? Take that trade back. I don't want that. I don't want to spend my money on that. Treat it the same way. Level of the day is only the opening level, the closing level. So yeah, the opening level is my level of the day. But I will say, and I'm gonna get it. I'm not gonna put all this out for y'all right now because I ain't trying to confuse nobody. I am starting to. This is something that I'm working on myself. I'm starting to try to incorporate the closing price. I've been back testing the closing price right now to try to take puts below the closing price. I did it one time and it worked, but for me, I won't teach nothing unless I do it 100 times. I like anything I'll teach you, I've did it over 100 times, right? So the closing price, I did it one time. So I'm not gonna incorporate the closing price yet until I do it 99 more times. So y'all can try it with me as well. See if puts work below the closing price. Totally up to you. I'm still learning it, so I'm not gonna put that out there just yet. But that is something that I'm working on. I have a video that I just made last week on supply and demand zone, so I'm gonna put that in the chat to how to properly make them. When you're waiting for the 15-minute candle to close above on the stop, and you are already down over 20%, still wait or just cut. So that depends on your account, right? If you're already down 20%, then I will already kind of look to just re-enter more. But I do have some trades where I'm down 20%, but we haven't closed above, so I would still hold. But let me be honest with you guys, and I'm gonna be very transparent when it comes to something like that. Those trades end up not working for me. Just being honest. If I'm in a trade and I'm already down a significant amount and I'm still waiting for a candle to close above, I ain't gonna lie. Most of the time, that damn candle gonna close above. I ain't even gonna lie to you. I'm not even gonna lie to you. That candle most of the time gonna close above. I don't know what it is. Actually, what's gonna happen is, which it happens to me, it might not happen to you. It's gonna close above and then it's gonna send too. So you waiting for it to close above to not get out. But I ain't gonna lie, by the time it closes above, you down 80%. But that's mainly because I trade weeklies. So if you don't trade weeklies and you trade like a couple months out or whatever, then you might be a little different. You might be able to risk holding a little longer, but I trade weekly. So for me, it's just better to cut and re-enter for me, right? That's just for me. I trade weeklies. That's just kind of the thing. So for me, I already you can watch the risk man. If you haven't watched the risk management video I have on YouTube, it kind of break down about account sizes and growing accounts or whatever. But normally, I ain't gonna lie, guys. I used to be back then, back in 2020, 2021, back then you could hold a trade that's down 30-40% and they come back to you. In this market, I'm just about to be honest with you, that's not coming back. Very rare, very rare. It's very rare for a 40% being down 40% to come back to you in this market. I'm just cut the trade. Most of the time, and this is a good tip that I learned early on, most trades that you take are going to work kind of right away. I'm not going to say right away immediately, but most winning trades kind of happen pretty soon as far as day trades. So if you catch yourself holding a little longer, just cut it. At this point, just cut it. Just cut it. Just cut it. Like, I want you guys to get into a habit of just cutting trades. Like not yesterday, we were in a trade that we cut for 8%. And I actually had somebody DM me and was like, Jay, why did you cut that trade for 8%? I'm like, well, the reason why I was in is no longer valid. So like I said, thank God that it's only 8% because it could have been way more, right? So just cut it, guys. Just cut it and just re-enter. It's so many, like, it's a psychology thing. All of us have been in trades where we felt that the price was going to come back and it just never came, right? And you just wish that you would have been cut. We all been in those trades where those losers just keep getting bigger and bigger, and we just wish, like, maybe if I would have cut then, I wouldn't even be that upset, right? And those is why we just cut. Present day, not the day before. Oh, yeah. So, and I'm gonna type it up in opening price. I'm gonna type it up, kind of some of the notes. I know I have somebody in here that actually wrote down the notes, so I'll make sure to send you their notes. But I'm gonna also type in the wording of the closing price so you can kind of like put it at your desk and kind of memorize it a little bit. But I know that it's a lot to take in right now. Take it day by day. Like I said, when I do my mentorships and stuff like this, it's a reason why I don't like. I ain't gonna lie to you guys. I always say, oh, the mentorship or the boot camp, I always put a time frame on it. Everybody will tell you my mentorship started in April and it is now, what is it, June? The mentorship was supposed to be in, and I'm not gonna lie to you guys, it's not ending no time soon. So the reason why is just simply because I personally just like to, how do I put it? I kind of like to I don't know. I don't feel comfortable letting people leave until they know how to properly trade or at least, execute on their own. I just don't like that. I don't like people like, oh, they paid for something and they just like, oh yeah, I learned from Jay and I'm gone now and I'm still unprofitable. For me, I kind of try to like as much information as I can put out on every week, just giving you guys classes back to back. I'll do Q&A sessions. We have one on Friday to where you can ask me questions and things that you're struggling with, and we go over that. Like, I just personally don't believe in just letting you guys go. I know people that do very short-term mentorships where they, got you for a month and they just kick you off. Trading takes way more than a month to learn, simply because it's a lot of trial and error, especially with the market adapting so much right now. You just need that extra help, and classes definitely help. Definitely people need refreshers and stuff like that. So, and I like to go over my day trading strategy, swing trading strategy. I like to go over those for like a whole week at a time. So it's just hard. Yeah, I'm gonna drop a link when I have more stuff open. But let's understand this, guys. If people are like, okay, well, Jay, why aren't you having the mentorships open right now? Guys, I am not a salesman. I am not a salesman. I am a trader. My money, it did come from the market. I love what I do. I make enough money in trading. I'm not a salesman. I'm not a salesman. So just keep that. That's why I don't have it ain't, I'll always tell you guys, whenever I get availability, that's when I could do it. But I'm not a salesman. That's just something, that's why I became a trader, because my family was trying to get me to go into sales, but I just don't like selling. Yeah, I hate that. I don't like selling. I don't like that, so to me, I don't know how to sell. Well, I don't know. I don't know how to sell. I can't. I literally don't know what to say to you guys. Hey, buy my mentorship. I don't know what to say to you guys. Yeah, like, do you want it or not? I don't know. And then that's the thing. Like the mentees will tell you. Like I be going on them. I be like, look, you paid to be here. If you don't want to be here and you don't want to take it serious, I will gladly refund you. Like that's why if you look at a mentor, I have literally I have no policy where it say you can't get a refund. Like if you don't like it, bye. Like I'm not finna waste my time. Like if you don't like it, just okay, you can here go your money. Bye. You know what I'm saying? So that's just me. Not trying to be rude or anything, but that's just, any more questions? I'm gonna upload the supply and demand video. This one gonna be uploaded as well. And then y'all are pretty much good. We have class tomorrow going over trend lines, and I always show my day trading as well. Again, we're going to go over my day trading for about a week, just to get you guys into it. We're going to go in my day trading a couple of classes just to get you guys used to it. So on the small account that you're trying to grow, how do you manage how many contracts to buy? So, okay, being real transparent with you guys, classes at the same time, classes always at 8 p.m. Eastern time. So for me, guys, and I'm posting this today. So I ain't gonna lie, it's been kind of hard for me to grow small accounts recently, just because I've been treating them like my big account. So coming down to those smaller accounts definitely be a little harder, simply because like I'm used to seeing those, not real transparent. I'm used to seeing, those 5,000, 8,000, $10,000 gains. So, seeing those $100 gains on a small account, I kind of tend to oversize, if I can say, and I end up leading to taking bigger losses. So that's kind of my thing. But as far as the small account, what I'm trying to do is I'm trying to take the small accounts. I can grow a small account from any point, like from $1,000 and up. I've did it multiple times. Just right now, I was on a losing streak and I was trying to grow a small account. So I've been, taking some hits, but I think I'm, kind of coming back. And the reason why I was on a losing streak was simply because I was trying to trade and chop, stuff like that. Like I, wasn't being patient, and I knew it. Anytime that I lose, guys, that's the crazy part. Anytime that I lose, I know why instantly. I literally told myself I wasn't going to trade in it, and the over trading hit me, right? And that's where that came from. So I know why I lose, right? I lose if I'm over trading. So this week in this approach, I kind of came to an approach where, I'm not gonna overtrade. I'm gonna let the setups come to me. I'm gonna be a little more relaxed this week, right? And there we go. This week I'm at 100%. I have not took a loss, none this week. I know it's only Tuesday, but over 20 some trades I've took this week, I have not lost not one. So that's pretty good. That's just from being patient. So just being patient, trading my plan, you see the results. So go from there. Today was my first time taking your class. I love it. Great. Definitely be here tomorrow. Yeah, small accounts. It's cool. Small accounts. We gonna get it. We gonna get y'all. So you use the same thing. Yep, same exact thing I'm showing y'all right now. With Forex, obviously you can't use the closing price. I mean the open and closing price, because it's it just runs. But pretty much the same, like trend lines. Anything else I told you other than the closing price? The closing price, I mean the opening price strategy is only for stocks. But everything else I'm teaching you I use the same exact thing for Forex and crypto. Same exact thing for Forex and crypto. Everything I'm teaching you in stocks, the same exact thing for Forex and crypto. I'm not doing nothing different on those. But yeah, with small accounts, guys, you just got to take it at a time. Now, Lawrence did say something yesterday that I actually agree with. Options do cost more than what they did back then. So, guys, I will recommend not quitting your 9 to 5 right now. Learn how to properly trade and then put more money into your accounts and then trade those accounts. I noticed one thing. A lot of you guys actually that has small account, a lot of you guys actually got money outside the market, right? A lot of you guys actually got money outside the market. You're just afraid to put it in because you don't properly know how to trade, or you're just not confident in your trading yet, which is totally fine. Learn the skill and then put the money in. How much money is money? Like I said, I personally like $3,000, $5,000 accounts. Those are pretty much good enough. But like I said, $1,000 accounts are just as good. With the confidence, with $1,000 account, you definitely have to have the confidence. Like I said, I can grow $1,000 account. I just needed it. Needed that. I ain't gonna lie to you guys. That like, and I'm real transparent. Yes, I did grow an account from $7,000 to $133,000 in less than 3 weeks. Right? I did. But let me tell you how that account, let me tell you how every account got a sad story to it. So I grew that account. What I did was I took A plus setups only, but I pretty much full ported the whole account every single time with very tight stop losses. So I grew the account to 133,000. Then I withdrew 40K out. And then I'm about to give y'all a whole breakdown. This account is crazy, y'all. I said less than 3 weeks, 7K to 133K, less than 3 weeks. I took out $40,000. I put it in my bank account. And then I'm so embarrassed to say this, but I full sent the whole account into Tesla swing, right? But I didn't mean to do that. I accidentally bought too many contracts. And I was like, you know what? I'm going to just leave it, right? So I left that. I lost $73,000 of that account. The account was at 20 something K. I full ported the account again on the A plus setup on AMD. That's when I made that $12,000 to $75,000 to AMD, brought the account back. And now today that account is at 150K, 156,000 to be exact. So yeah, like that account that been through hell. That's like it's crazy that it came back that fast. I wasn't expecting to get the account back this fast, but it happens when you just take A plus setups. And it's not, I wouldn't even say it's like a YOLOing kind of thing. It was mainly just because like taking A plus setups and just being confident in what you're doing. But that could have been easily avoided if I did swing Tesla, because Tesla, but it was that day that Elon had said something, and Tesla, I was in Tesla calls and they had dropped, and I was, oh man, that was a bad day in the market. I had to take a break from that day. But if I had never did that, but as you can see, that was the only thing that I went against my rules, swinging that high. For some reason, whenever I try to swing $80,000 in the trade, I always lose. Every single time I swing over 80,000, or I just lose for some reason. So I'm not ready for 80,000 yet. I like to day trade, but I do swing. The platform that I use for Forex and crypto, I use Coinbase for crypto, Coinbase Pro, and then for Forex, I use IG, but I am switching over to KOT4, KOT4. Yeah, that's the data that I lost. KOT4, or they got other ones. I'm gonna send a list in the group that you can use. I don't really like IG that much, but that's the one that I'm using. My Forex account, I grew from I started with $5,000, and my Forex account to today right now is at $43,000. And I started Forex recently. I just started Forex, so it hasn't even been a month yet since I've been doing Forex, and it's already at 43K. Do you trade futures? Not yet. I don't trade futures yet. Everything is similar though. I think futures move a little more faster, but other than that, everything, I will still use the same exact charting skills that I'm teaching you guys for anything. A chart is a chart, guys. Candles are candles. Okay, let me go back. I'm posting this tonight. I'm gonna look at AT&T. What is my statement on the market tomorrow? Y'all not gonna like what I'm gonna say, but I don't know. I feel like we're gonna have a pop, a rally tomorrow. I don't know why. Like, I just feel like I think like we might drop overall, but I just looking at the IV on these puts. I don't know. I feel like they might pull one on them puts. Like looking at the overall IV. If you look at the IV on these puts, these puts are like 100. 200% on the IV. So I feel like that's an easy win for them because everybody going to be in puts. They go ahead and chop them puts up, you automatically losing. So I think we're gonna have a little push tomorrow, but I could be wrong. But just looking at these IVs on those, this is normally a good setup for them. Like I ain't gonna lie, if I was a market maker and I wanted some extra money and I know everybody betting on puts for these basis points, I will pull this on y'all. I will literally, like, if I'm being honest, this is a time that if I was thinking institutional, I would go ahead and pull y'all out of these puts because the IV is so high and we know everybody in puts. Why not pull the puts on them? That's just me personally. But I could be wrong. But I do think we're gonna pop. I don't know why. I have that gut feeling that we're gonna pop. And that's why I bought one Bitcoin not too long ago. Just because I bought some Solana, I bought Ethereum, and I bought a Bitcoin just in case we pop tomorrow. So we're gonna see. I think I'm up on Bitcoin. I think I'm up on all of them. I was up before we got on class. I'm probably down now. Who knows? But yes, in 3 weeks. I know it sounds crazy, guys. I know it's crazy because a lot of you guys you haven't been trading with me that long. So you probably think 7,000 to 133,000 is crazy. But I ain't gonna lie, people that's been trading me for 2+ years now, they already know. Like I do crazy stuff like this all the time. This is nothing, it's nothing new. Like I wasn't even excited. Like it's nothing new. Not to sound cocky or anything, but this is common, really common. When you believe in your system and you block out the noise, you will notice how you're able to get these gains as well. A plus setup. So we actually just went over A plus setup. So A plus setup is not like an actual one particular setup I'm looking at. A plus setup to me is when you have the bigger time frame showing the same thing as a lower time frame, and then you have your index or whatever your sister stocks are agreeing with the chart that you're trying to trade. So you have those confirmations, right? That is my A plus setup. I have multiple confirmations. I have QQQ. Like let's say I'm in Tesla. Tesla daily looks bearish. Tesla 1 hour looks bearish. QQQ look bearish. To me, and we got a chart pattern. To me, that's an A plus setup. We got multiple confirmation. Unless the Fed, if the Fed said 100 basis points, I'm not gonna lie, I can see it's coming down. But like I said, I'm not really a big fundamental person. I am learning more into fundamentals just because it's kind of annoying. Sometimes when you're trading and then some fundamental come out and mess up your whole chart. So I am still like adapting to trading fundamentals, but I'm not gonna lie, I didn't ran my account up to 6 figures from not using fundamentals. But I think as far as my growth, understanding fundamentals a little deeper would definitely help me elevate even more. But right now the charts pretty much is what I use. But yeah, if they say like 100 basis points, because I think we're already pricing in 50 basis points or it's 50, 75. I think we're already pricing that in. So we would need something higher, to actually make the market come down. We need something unexpected. So they're definitely pricing in 50 basis points already, though. Definitely. We've been falling. We've been red for 3 days straight. We're definitely priced in. We're pricing the hell out of 50 basis points. Do some of your mentees leave once they get it to open up slots for other people? So actually, none of my mentees leave. So every person that I ever mentorship, they're still in the Discord. Now, the problem I do have with mentees, let me start this recording because I don't want to be that long.